That's right.
So
What is it?
we'll start our lesson in a few minutes. Hope everyone will be here. And today's lesson will go through LO3, Learning Outcome 3. And I just share all the resources, the required resources available on Moodle. Other than that, we can look around F6 of ACC exam, which is quite relevant. And I mentioned, open tuition on our website. Our ACC articles, those are appropriate, for this subject, this unit. And let's, we'll start. Hope other will carry on joining us. Today lesson will go through LO3, which is be able to apply the taxation planning and may to minimize defer the tax liability. That's the key, which we'll go through. So previous lesson, what we learned about the popular people chat in office. So we discuss about professional behaviors. We discuss about professional competencies and due care. We discuss about confidentiality, integrity, and objectivity. So these are 5 professional code of ethics. All those we working in accounts, really we need to follow them. And if competencies, we need to carry on doing CPD. Okay, so then whichever year really we're looking, Finance Act 2023, that's the appropriate, but if you're applying any other, which is absolutely fine, really we need to look around. We already had a discussion, parent company on 100%, subsidiaries 50% or more, and associate is 20 to 49%, and simple investment, so tax elements and control that can be, which we can look around in a minute, and capital gain tax, inherent tax, and fuel allowance. That's all will be in discussion for planning purposes. So we have to look around. So today is the key. We're looking tax planning and ethics and indicative content, which cover range of different, investment and other expenditure that may be result in reduction of the tax liability for individuals, and both incorporated or incorporated. Sales tax planning is illegal, which we can mitigate tax based on the numerical analysis, and we'll do that consideration. That's we need to. And during our lesson, we already discussed about the base rate. Tax rate different, so we had a discussion about 12,570, the no tax personal allowance, and if you earn more than that up to 37,700, the tax is 20%, and the dividend rate is 8.75%. If you earn more than that, 40%, dividend 33.75%. So which we can look around the income. And then we had a discussion about transferable amount 1260, which we can transfer if your partner not working, and the personal allowance you can transfer towards you, where adjusted net income it can be 12,540 or more. Personal allowance it can be 0 if your income is more than 125,140, then your personal allowance will be 0. So you have to pay the tax on all amount. That's really we need to look around. Like 37,700 will be all tax 20%, and then remaining will be up to that 40 and then 45% addition. Okay, so then residency rules we discuss about ties. So that we can property income, car benefit percentage. We had a discussion, which we look in a minute further, which we need to keep in mind. Yes, car fuel allowance, rent, authorized mileage. How much? Yes, 10,000 is 45 pence. If over 10,000, any miles you do is a 25 pence. So we have to look around. Car is a better, just a fuel claiming is a better, because car come under the benefit, and then of course your personal allowance can be reduced. Okay, then we can look around the man pool. If your asset is belong to man pool, it's 18% capital allowance. If special pool is 6%, according to the Finance Act. And if it's a new car with 0 CO2 emission, is 100% you can claim in the year 1, and the second-hand car with the CO2 emission 0, then 18% if you're. So that's why is to save the tax liability. Let us say, come on, better to be buy a new car, electric car, which is zero carbon, and we can look around 100% exemption in the capital. Okay, that's from 2026, government is planning to reduce this, not 100%, and plus this road tax as well. We're going to introduce, so we can look around. That's all it's at the moment in a process. Okay, so annual investment allowance rate of annual investment allowance is 100%. Expenditure limit can be, which we can look around 1 million. So that's commercial structures and building, yeah, state line allowance and caps. So these which we need to be look around if you're dealing with the and marginal relief, that's which we can look around accordingly. Total taxable profit divided by augmented profit. So that's upper limit, lower limit. Okay, those are given in our calculation purposes. So we can look at an inherent tax nil band is 325,000 if the property are is more than that, then of course resident nil rate band. And then we can look around excess, death rate and lifetime rate. That's which we can apply these. And then of course, how long before the death the property was inherited. So that's the reduction can be the rate of interest, capital gain taxes. Yes, so we can look around the rate. Normal rate is lower rate. Annual exempt is a 6,000. If you have more than gain, then of course you have to pay the tax. Lower rate is 10, and upper rate, which we discuss about the upper and lower limits. So that can be which we need to be residential properties, investor relief. That's which we need to business asset disposal relief. If you so that's which we can look around. Then of course we discuss about deliberately hiding things, penalties, tax, some fines. Okay, welcome. Let's we'll go through 3.1, which is about evaluate the investment and expenditure resulting in the reduction in the tax liability. The current annual investment allowance, which is 1 million, will be continues to apply the exam, because of course you don't have your exam, but we're looking in terms of when you're preparing for. So 1st June to 31st March for this, if you're looking Finance Act 2024, annual investment allowance is 100% first of the expenditure plant and machinery in 12 months. Any expenditure in excess of limit qualify for the written down allowance as normal. So we can look around annual investment apply all the expenditures on the plant and machinery, which will look in this in our calculation for the tax liability. So please, nowadays of course we use a lot of embedded calculators, so due rates carry on embedding within it as long as you're putting the things in order. So that's which we can look around these. Yes, so we can the proportion we can do if it's a month. Yes, how many months when you invested and how many months were left. That's which we can proportion them. Okay, let's please we look example. So we are preparing accounts from 1st April to 31st March 2024, and tax written down allowance for the plant and machinery in our main pool is 16,700. And then please the following transaction took place during the year end, which we can look around the purchase of the car, we can look around purchase of the car, purchase of the equipment, yeah, and all. Then we've been given all the information, the omission level, car sold as well, which we can, and we've been given the purchase and the CO2 emission gram, that's which we need to be look around according to the tax rate. Purchase of 14 April, and sold, and then we can look around all these electric cars and things. Then we've been applying the rules as given in the Finance Act. We can look around the man pool, car, and special pool. So written down allowance, which is a broad for previous year's assets. We can additional qualifying annual investment equipment which was bought 98750, and it's 100% up to 1 million, so we can 100% exempt for this. Then we have the car one is, we can look around, is 15600. Car two, we have that fall in the special pool. And then we have car three that, due into the main pool, and proceed of the car which we sold the car from the special pool. So these, which we can dispose of course we can't, and we need to be look around now. Man pool, how much is worth of the asset we have, how much worth of the asset we have under the car, and special pool, those are special, and allowance, which is annual investment allowance, which we just mentioned, which we can claim 100%, and then 18% which we can claim. Then first year is 18%, and then of course we can look around these, the special pool annual investment allowance. So please, we need to apply the rates, and then that's, will help you to save the tax. So that's additional qualifying for first year allowance, 16,800. First year is 100% qualifying, is in case of the car 4, which we've been given electric cars. So that's, which we need to be look around. So written down allowance which we carry forward for the following year. So total allowance which we is 126. Yes, that's, which we need to be calculate, and we need to adjust, our tax liabilities accordingly. So that's all the explanation which we just mentioned, so you have to look around the rate. Is it falls in the main pool, special pool, CO2 emission levels of the car, electric car, which is car 0 is CO2 emission, is qualify 100% first year allowance. So you have to look around each year qualified. So please, if you want to look around further and want to explore about these, the rates. So I just show you, this is the handout which is available on our Moodle page as well. And other than, I'll share with you, which it came from ACCA article. Yes, so please, it's good to look around this. So plenty of examples, within this, so which we can. Other than that, I'll give you one or two books, which we can use these. Okay, so please, if you looking the written down allowance, which is capital, yes, so capital gain and allowance. So if we look, please, written down allowance, so you have to look within this handout, and you can include some examples for your assignment purposes. So please, you can pick it. Yes, so you will see there capital allowance, so which is given chapter 5, page 53, and you can pick example you can include in your, or if you want to do practice and you want to look around the scenarios, you can as well. But please look around the rates, that's application purpose. Those are crucial. We need to apply them in actual. And you can pick any year's finance act, which is absolutely fine, no harm, but make sure you explain, this year rate we are applying. Okay. The new car with the 0 CO2 emission is 100%, which we just mentioned. Yes, so we can look around this, and if you provided a car and 2% car benefit percentage is available, there is the minimum income tax application for the employees in the small amount, the class 1 national insurance contribution payable for employers, which we can, and look at low emission car, the company car, therefore is the beneficiary, especially directors who are 100% shareholders in the own company, that can be, they can claim the low emission car they can buy, and ultimately this will help them to save the tax. Okay, so annual straight line is straight line allowance is unchanged, which is a 3% with the relief being given our 33.3%, which is 33 years and 4 months. and which we can look around the structured building allowance is only available where the building structure has been constructed between these years, which we can look around separate under the property if it's a personal art. So we included some examples to look around place. That's we look at this. So on the 1st July, the company purchased, newly constructed factory from the builders, which is 470, including the land of 110. And the factory is bought into use on the 1st September. The qualifying expenditures is 360,000, which we can look around the land elements we take out, because the land uh, and the factory has been bought into use at 1st September, so we can look around the proportion of the month from until 31st, So we have qualifying 3%. So first you calculate the 3% and times by 7 divided by 12, because of course 7 months until that point, until 31st in this year allowance, and allowance of 10,800 at 3% will be given in the subsequent years as a full year. We can look around. Okay, so for the tax purposes, business may not deduct the cost of an item from the profit depreciation, because depreciation is not allowed, please. Written down allowance is allowed, which we can look around that we can apply. Yes, it can be many things which can come around with it further with the matter of exploring and looking which is applied to the particular company's balancing allowance and charges, right? So we need to be look around the original cost of the asset, cumulative capital allowance, written down allowance value of the asset, and disposal of the asset if we have then the balancing allowance charge, which we can. Let's see, that's which we can look around asset assumed to be bought in year 0, and which we can look around the ownership and 12 months, yes, in different periods. So please, we can apply the written down allowance accordingly. We can proportion, yes, as the bought the asset, yes, end of the accounting period, then of course we have to look around the period and we can apply our allowance accordingly. That's the planning purposes we can advise to. For majority of investment appraisal question in exam, of course we're not doing any exam question, we're doing in assignment. We can pick and we can apply the rate, so you don't have exam, you have only assignment. So we can look around yes, net trading revenue, we can look around the tax payable, investment, residual value of the asset, tax relief, written down relief, or working capital. Okay, so please, pension and the tax efficient, investment product. Pension contribute to the pension scheme and enterprise investment scheme. We can look around seed enterprise, the scheme or various these are the scheme government carry on introducing these scheme to motivate investors to invest. So loss relief, aggregated in the profit and the loss, which we can carry forward up to 5 years in the current years. Then please, we have look around 3.2, review the legitimate tax planning measures. When it's come to the tax planning, married couples, which we can look around civil partnership, we can transfer the allowance. So let's please look in this case. So so Samantha are married couple for tax year 2023, and will have the salary of 90, and Samantha will have the salary of 30 and saving income 50. Samantha is the basic rate taxpayer, and so her saving income will nil band is 1,000, and the remaining 500 of her saving income will be taxable at the rate of 20%. And Semel is the higher taxpayer, so his saving income nil rate band is 500. And we can look around the transfer saving to Samuel. So saving of 500 will be there for the save income tax 20%. So is £100 saving. So we can look around the threshold is a married couple salary is 90,000, so it's apply high, and others Samantha have the salary of 30,000. So we can look around the saving income. We have the saving allowance, the basic taxpayer and that's help to save the tax. So basic tax rate, her saving income nil band is 1,000 and remaining 500 of her saving income be taxable at 20%. Higher taxpayer, so the saving income nil band is 500. So if transfer 500 saving to the husband, that's it can be um, nil band. So ultimately it will be benefit for, and that's help to reduce it £100 because each individual have. So we have to look around what their tax bracket, and we need to look around how much saving can be. So tax planning is illegal, which we can look around accordingly. Okay, so please first £1,000 of the dividend income from the tax year 2023, the benefit from the zero rate and the 1,000 nil band is available for the taxpayer regardless whether they pay the tax, the basic, higher or additional. However, the dividend nil rate count toward the basic rate, higher rate band. So dividend income is the excess of the 1,000 nil band is taxed at 8.75%. And if it's fall below the basic rate of 37,700, then of course it goes, the 33.7% and fall between the basic threshold and the higher rates, which we can look around is 39.35% at the dividend rate, so which is lower than the tax rate. So can be, so let's please we can look around. In this case, is a salary being given, which is 62,500 and dividend income we have 28, and we've been asked to calculate the tax liability. So non-saving employment income, dividend income in this case. So please we need to look around the personal allowance for this year. We minus from the employment income and the taxable income is, and please first 37,700 will be 20 and remaining will be 40%. 2,800 is the income which we need to be, so first 1,000 is nil band everyone, and 1,800 will be 33.7%, and then we can say how much tax liability is, and that's carry on. If it's a marriage allowance, then of course we can transfer as well. So other is a Rika's income in this case. So please we can look around again. Examples is 44,000 income, dividend income, and we can calculate the tax liability. So these are good few examples. Please in your assignment, if you want to include, you can. Saving income, which we just earlier explained, limit which we need to be look around, and which saving bracket, tax bracket is you false, so we have to calculate. So let's please we can look around one more example here. So example 9, Joe has the salary is given and saving income, dividend income during the year, and he paid the interest 300, which was the qualifying purposes. The Joe employer deduct income tax, which they already done at source pay as you earn, and the non-saving is given, saving income is a given, and dividend is a given. So then please interest paid, which we can minus, and then personal allowance 12,570, and then please we have to look around. Now 37,700 is 20%, and the saving income first 500 is exempt because our all income is more than 37, and 1,500 will be 20%, and the dividend income first 1,000 is exempt, remaining 500 will be 33.5, and then we can say, and the tax already been deducted at source, and the remaining will be 1928, that will need to pay the tax. Okay, relief. So we have to look around the qualifying profit, qualifying period, for profit before we can look around in the trading losses. We need to look around. Can we carry forward? We need to look around the scenario. Carry forward losses if we can up to 5 years, and please we need to apply these losses again. So like here is the pro forma 2019, 20, and 21. So we can look around the base stage qualifying total profit losses, which we can look in next examples. So which we can, losses can be carry back 12 months are usually means, loss can be deducted from the profit of the previous accounting. However, the previous accounting period is less than 12 months long, it's possible to carry loss back to the cover proportion of the profit, which can be. So that's, which is legal for, yes, so which we can look around. That's the company want to be obtained the highest tax relief. So that's, capital losses, any excess losses, net carry forward losses. These we need to be look around. Please SME, small medium enterprise, which we can 100 pounds spend on research and development deduction, 100 plus further, 130 for the tax relief, to 30% off. So we have to look around if the loss is created and it's surrendered the cash, the payment to HMRC. So we can look around different scheme of these qualifying. So in anti-avoidance legislation, IR35 really we need to be work around. A lot of legislation being changed, so we can add some example. NI special entry, the client, the fees, and who's controlled by the company, the owner. So relevant arrangement legislation is only apply the relevant arrangement. The contract between the company, the client, yes, have, and the contract employment is absence of. So IR35, we have to look around and the tax, will be, and we need to be look around the fees, engagement. Okay, so 3.3 evaluate the mitigate tax for individual and businesses. When providing the planning of the tax to achieve, you're fully responsible for the advice you give. The fundamental principle which we need to look around 5 professional code of ethics, tax planning, the legal tax surveillance. Yes, illegally, such as the failure to disclose the relevant information or provide the false information which we need to, and measure the limits, time limits which we need to be look around those. Which we said popular people chat in offices, we need to look around in 5 professional tax. Is attempt to is the thread of the fundamental principle, integrity, honesty, professional behavior may be subject to the criminal charges for the tax laws and the money laundering legislation. We look the responsibility and provide the information requested, and we can look around to make the disclosure to HMRC and authorize the errors. And we can look around. We must inform to HMRC that we are no longer is acting as a client, but you are not under the obligation to explain why. So would be the breach of confidentiality, and we can look around the professional duty to ensure client is understand the seriousness of the offense. So direct tax avoidance scheme, promote the tax avoidance scheme, relating to the direct taxes, income tax, national income. Insurance have the disclosure obligations, notification required. Yes, promoter arrangement proposed. VAT value added tax, avoidance scheme must be disclosed, to you. The certain VAT schemes notified, which we need to be look around design 15% of the VAT, which we can look around the flat rate special scheme as well. Special avoidance, yes, taxpayer who use more one tax avoidance scheme has been it, so we can look around under a lot of the legislation these for that. So in term of the tax planning is the legal and schemes which we can, if any particular special scheme. So please, when we'll do the merit criteria, evaluate the ethics arising the tax planning. Of course, ethically need to be correct. Made by law is correct, but we also follow the ethics as morally correct as well. Tax avoidance scheme, direct tax avoidance scheme, VAT avoidance scheme, serial tax avoidance scheme, which we can look around. These ethics, which we mentioned earlier, which is fundamental, disclosing information, tax avoidance, direct tax. Promoter must be disclosed, and sometime, the taxpayer, and the main benefit of the scheme to obtain, advantage of the relation to the tax and penalty of the non-disclosure, initially up to 5,000. And VAT, avoidance scheme, businesses use, the scheme to disclose, and penalty 15% of the VAT. So that's, which we need to be look around all different schemes, and we can add some examples and money laundering legislation, which we need to inline. Okay, so when we do please our assignment, we'll give some examples which we do in our assignment discussion, which we mentioned. Of course, when familiarity, threat, intimidation, advocacy, if you know these, the client number of years, so you have to make sure you draw the safeguard, not impact your professional code of ethics can be breached. So there included good few examples, please, which we can these when we'll do assignment. So we handouts, please. We can look around the question 1 and answers, please, which is ACC handouts. It's the link here as well, so you can copy and paste, for further examples. Okay, any question, please? Okay, so that's all from my end. If any question, please feel free, you can ask, and which we can look, we can pick the example from the booklet, and when we'll do assignments, so we can quote as well. Or any other example you want for the tax planning purposes to demonstrate, which is absolutely fine. Just need to make sure, clearly highlight which year finance sector you're applying in this case. Huh? So that's, yes, please.
Can you hear me?
Hello, yes, I can hear you.
Yeah, sorry, I wanted to ask, if you're acting for a client, and of course you let HMRC know you're asking, then when you stop acting for a client, are you in any obligation to inform them?
If you look, and you say the client is not really maintaining the record, and you can say to, and maybe you don't need to explain to HMRC why you're not acting on the behalf of client yet. You can
Okay,
say, sorry, I'm not.
If you do not inform HMRC, are you committing any crime or something?
uh, uh because when we look the ethical side is the integrity, yes.
Yeah.
Or you can let the client know, sorry, we can't be act behalf of you because due to our own act.
Yeah.
So please, it's better to, they can approach to anyone, and you can just a simple email, because I'm not acting anymore. You can go in your list,
Okay.
the online your management account, agent management account, so you can remove from their request data.
Okay. All right, that's fine. Thank you.
So we need to look around the confidentiality as well. We don't need to really explain all that.
Okay. Thank you. Thank you.
Yes, thanks for. Okay. Thanks for attending, and have a nice time, and we'll speak you next week when we'll go through our LO4. Is there any chance?
All right. Thank you so much.
Thank you, sir.
I'll give you the booklet here in the chat box. Yes, if you want to use, you can, please, for examples. So is in the chat box, is available on our Moodle page as well. And I'll share with you ACC one as well. So the few example there, finance at 2023 one. So these are there, please. In the chat box, if you click, you can download. Okay, other than that, I'll send you the recording plus, all the resources available. If you want, particularly, you can find ACCA article on like inherent tax are written down along, so you can find, with good few examples when we'll do assignments. So for assignment purposes only, we can, of course. And finance sector, you can download itself. I copy the link for you as well. Okay, thanks for attending, and have a nice weekend. I'll speak to you next week when we'll go LO4. And is it okay? We'll keep, next week as well on
No, Saturday is fine, please.
Sorry.
Yeah, I don't teach you
We'll do next Sunday as same time, and then the following we can do on Saturday. Or if you want, can we do late on Saturday?
Yeah, late on Saturday is fine.
Okay, no problem. I'll change the time for Saturday because 11 o'clock is becoming a bit, I have other commitments. So what I'll do, uh, maybe I'll keep 3 o'clock.
Okay, that's fine.
Okay, no problem. I'll change, I'll let you know and I'll drop you message there on the WhatsApp group.
Okay, that's fine. Thank you. Thank you.